Okay, we are seeing, getting an indication that shares have begun trading for a DoorDash. I want to see if we can get up the board here to take a look at where we see the price action right now. DoorDash opening at $182 a share. We are seeing it right there at 180. Remember, this IPO priced at $2 initially. Still a significant pop, Zach, although we saw it sort of the range come down just slightly after hitting, I think at one point it was at 195 to 200, which is where the range was. But right now we are seeing it at 185 a share, Zach.
Yeah, and I mean, keep in mind, this is something that we were talking about too in getting this to market. They were going through DoorDash, going through with a hybrid auction to really try and see where the right place to trade these shares or price these shares in the IPO was going to be. That's a little bit of a different mechanism than we've seen before. The hope was that it would get closer to the true market price and demand here for some of these shares in these high-flying tech companies. I think today shows us that necessarily has not been solved here, seeing as we still see a major pop in their debut. Keep in mind, DoorDash originally priced at about $75 to $85 a share in their original S1. They upped that range to 90 to 95 before pricing at 102 in the IPO, Aikiko. And now here at 182, I mean, it just goes to show it's very difficult still somehow for the underwriters here to gauge demand and where investors are actually willing to pay for shares in these quickly growing companies. And DoorDash, as we've been discussing, is a little bit of a exception to that rule, just in terms of how quickly this company was growing. It's a little bit of a strange time with the pandemic to try and really figure out what the growth trajectory looks for some of these companies. But I mean, we had never seen before a company like DoorDash coming out. We have never seen recently here a growth rate of 200% year over year. What they posted in their S1, it was far and away the largest growth rate we saw here. So perhaps not surprising to see the demand for DoorDash shares be completely higher than expected. But still, you got to wonder about all of these problems. Why? There's still problems in underwriters to correctly price these shares, and perhaps that's why we've seen SPACs catch so much attention here in 2020.
Yeah, I mean, that's a good point to make here. If you look at where the shares were initially priced at $102, we're talking about a 78% pop, I think is what we're looking at here when you look at where the opening price was. It's going to be interesting to see how things shake down moving forward, because to your point, you could argue that DoorDash timed this perfectly in terms of the IPO, really in a year where we have seen huge growth in not just DoorDash, but the food delivery space as a whole because of the pandemic. And the big question is going to be, as we've been repeating throughout the last few hours, is what does that landscape look like post-pandemic? Are people going to return to restaurants? Are they going to continue to stick with the habits they've picked up as a result of these stay-at-home orders? And I think that's still a big question mark. You could argue that DoorDash, even before the pandemic, was in a good position in what has become an increasingly very competitive landscape. They've got about 50% of the market in the US. And that's no coincidence here, because DoorDash, when they set out on their strategy, really did focus on the suburbs and some of the smaller cities. And I wonder if we have this chart to pull up here about how things are shaking down in terms of individual cities, some of the largest cities in the US in the food delivery space, because that does point to the fact that while DoorDash does have a significant market share right now in a space where there's a lot of competitors, it also is really up for grabs from city to city. So how DoorDash navigates beyond that is going to be interesting. The subscription model also certainly going to be a significant driver as well. But at least on the initial day, certainly a good day for DoorDash here, up 82% from that initial $102 price.
Yeah, and Aikiko, a very good day for Masayoshi Son as well as SoftBank and their Vision Fund, which had not been doing very well when you think about its relative performance to the market. It was a win that they needed here in DoorDash. This is one of those ones that they have focused on. Look, we need to start really pushing this thing out here, because Uber, as we know, did not go well for Masa Son. But this one, very different than what we saw in the enthusiasm here. And of course, profitability is going to be one of those things we discussed. We discussed that earlier in the show with our earlier guests, pointing to exactly what you're talking about in timing this perfectly, because they are seeing a bigger boost than I think anybody would have expected in 2020 due to the pandemic. And on that front, they reached profitability for a quarter, but then immediately flipped back into being an unprofitable company. in terms of what revenue runway still is there and how much they're willing to pay to get that and steal share away from their competitors in Uber Eats and Grubhub, we'll continue to watch. But here on day one, a rather large pop trading at 186 above that 102 pricing in the IPO, and clearly going to have a lot more money. That's overlooked here to extend that runway. They're going to have more cash to burn through, as they may want to do, and as they've been accustomed to doing here as well. But a very exciting day for DoorDash too. Let's not overlook the fact that this is a company that started out similarly, like all the IPOs we talked about, being a very small company with just a few employees, the Stanford roots there, and now coming out on a big debut here at Aikiko.
Yeah, a company that was founded in 2013. Tony Hsu's really been pushing the narrative, as we heard from so many founders, about being the son of immigrants, really coming up with this idea while he was a student at Stanford. And now, 7 years later, seeing this company that he started in the Valley coming to market.